In this presentation, we're going to record a deposit related to a short-term investment sale. In other words, we have a short-term investment. We're imagining the investment being in something like stocks and bonds. We have a sale of that investment resulting in a deposit. We need to record the deposit, the decrease in the investment, and any kind of gain or loss with regards to that transaction. So here we go with Xero. Here we are in our Get Great Guitars dashboard. We're going to be opening up our financial statements now, going to the accounting dropdown, opening up that balance sheet report. As it opens up, we're going to be right-clicking on the tab up top and duplicating that tab. Let's do the same for the income statement, going back to the tab to the left, then going to the accounting dropdown once again, opening up that income statement report. When it then opens up, we're going to go to the tab up top, right-clicking on that tab, and we will duplicate that tab, having our reports to the right, the data input that we'll do on the left. This is what I recommend doing pretty much every time you're working on this information, or that's how I would do it. And then I'm going to select the drop down, and we're going to pick the month. We're in the month of February, so I'm going to bring this up to the month of February. There's 29 days in 2020 in February, in case you didn't know that. We're going to go back to the income statement now, and we're going to be picking that up. That looks good. Now let's think about the objective here. We're going to go back to the balance sheet and then scroll back down, and we're going to say that we have an investment that's going to be coming due. Now, the investment we have is in E-Trade. So we have this E-Trade investment. We're going to say that the market went up, and now we're going to be selling it. If we imagine that this E-Trade investment is stocks and bonds, we can imagine it's in stocks. The stocks go up, we're going to trade it. So we'll say the stocks went up to 17,000, and we said, hey, buy low, sell high. That's my motto. So we're going to go ahead and sell it at this point in time. And that means it's going to be a deposit in the checking account. This amount's going to go down. Also note, you may see this in other kind of areas. In other words, you might have like an investment in your bank account, like a savings account or something, or a CD, which may automatically become due at maturity, at which time you may only see that once it goes into your checking account. You'll see a deposit. And then this is not a usual type of transaction. You're going to have to figure out, well, what am I going to do? How am I going to deal with that transaction? Because once again, this is another type of transaction that happens fairly often. But if I go back to the flow chart in terms of QuickBooks Desktop flow chart, it's not one of these normal flows. Therefore, there's not a form that's standard to deal with this, because it doesn't happen every day. So we don't have a normal flow of it, although it happens every once in a while. So we're going to have to say, all right, that's not part of our normal flow. Therefore, how are we going to record this transaction? Well, we know the checking account's going to go up by the amount of the sales price that we're going to have, in our case, 17,000. We know that the investment needs to go off the books. It's no longer there. We don't have it anymore, but it's only going to go down by 12,000. The difference then is the gain that we had on this transaction. And that means we're going to have to say that usually goes to an income statement account called gain on investment. So that's what we're going to have here. We're going to enter that into the system. Let's go back to the first tab in order to do so. We're then going to go to the drop down up top. We're going to say that we received money. So we'll go to the drop down and we'll go on down to the receive money. The money is going to be going into our checking account. So we're going to select the checking account is where we're going to be receiving that money. I'm going to bring this up a bit. Let's bring it up to 125 so we can see it better. This is another transaction where there's going to be 3 accounts that will be affected. So we're going to have to be dealing with the 3 accounts. We know that it's a receive payment this time. Therefore, whatever the difference is, or this transaction in general, in sum, will be increasing the checking account. So we're going to say investment. I'm going to say from E-Trade. So we'll keep it at E-Trade. I'm going to say this is going to be on the date of February 1st. So let's go to February 1st. And we're going to say this is a sale of investments. Something like that. Quantity. And then we'll say we know that the investment is going to be going down. So when we think about the investment account, what's in there right now? What's in the investment account? 12,000. So we're going to take that down by 12,000. Back to the first tab. I'm going to say, all right, 12,000. And that's going to be in the investment account, which I'm going to type in investment E-Trade. And then the other side, I'm going to copy the description. It's still going to be a sale of an investment, this whole thing. And that will put it on, the transaction detail report for both accounts. And the other side is going to be some kind of gain, because it's got to add up to 17,000. That's going to go into the checking account. So the other side has to be the difference, which is 5,000. And where are we going to put that? Well, it must have been a gain. And so we're going to put that on the income statement somewhere. Let's hit the old drop down and see if there's some kind of revenue account related to A gain on sale. Doesn't look like there's any revenue account related to that. So I'm going to set one up. We're going to set up a revenue account. I kind of want it. So we'll add another one. I just want it at the bottom of the revenue accounts down here. So like maybe like the 4715. Let's make it 4725 or something like that. 4725, 4725. I'm trying to remember this. 4725. So 4725 right there. And then the account is going to be, I'm going to put it into the old an income type of account. So we'll scroll on down to the income. And we have the options of other income type of account or an income. Now I'm going to put it into the other income because it's not really my primary source of income. So I'm going to say other income here. And then I'm going to give it the account name of gain on sale of investments. Like so. And let's go ahead and add that and see where that comes out. So there, it looks good. So then the amount is going to be 12,000 and the 5,000. It's applying sales tax, so I don't want sales tax applied here. So I'm going to select the drop down for the sales tax and say this is not a sales tax item. That'll bring it up to the 17,000. So we have the 12,000 to 17. What's this going to do? It's going to be increasing the checking account by the 17,000. That's the amount we sold it for, increasing the checking account. A decrease in the investment by 12,000, bringing it down to 0. The difference then increasing an income statement account, net income going up then therefore by the 5,000. Let's go ahead and save this and see if that is indeed what the case will be. Let's go on to the balance sheet then and check it out. I'm going to go back up top. We're going to update the balance sheet. We want an updated report because we only work with reports that are up to date. Going to hold down control, scroll up just a bit. Are we at the 125? We are. Then I'm going to go into the checking account. Let's open up the old checking account. And we should see this $17,000 deposit, which is nice. So I'm going to scroll down. We should get into stock trading because we did really good there. So that's the 17,000. Probably got lucky, so I'm not going to do stock. But in any case, 17,000, there we have it. Going back up top, then the other side would be decreasing the other investment account. So we had 12,000 in investments. That then will be disappearing at this point because we have now brought it down to 0 because we've sold all of it at this time. Then if we go to the income statement and we update the income statement, we should see that gain of 5,000 we put down here somewhere. So if we go on down to the bottom, notice it put it down on the bottom in the other income and expense section down here. And that's nice because we're able then to say, hey, look, this is what my operating income is. I'm not in the business of buying and selling stock. You know, I just happen to buy and sell stock as it kind of happen to do quite well. But no, so we put the 5,000 down below because we don't expect to see it again. So we want the operating income up here. And then the other kind of random stuff we might want basically down here so we could see our operating income and then the other items that may affect it.